Have you ever heard of an appraisal gap? And do you want one? My name is Sean Larson, real estate broker, and let's explain all that. Let's start at square one. Just in case we have any new home buyers, let's define what an appraisal is. An appraisal is an opinion by a professional appraiser about the value of a property. And so what they do is they use other properties that have sold that are similar, or they make monetary adjustments to come up with a value for the subject property, the one that is the topic of conversation, the center of a transaction. And the reason they do that, it includes several reasons. One might be if the buyer is securing lending to make the purchase, the lender wants to know the value of the property to ensure they're not over lending for the value of the property. If it's a cash buyer, the buyer just wants to make sure they're not overpaying for the property. And it's a little bit of a misconception, I think, that cash buyers don't want appraisers. And if you have an investor and they're super experienced, that might be the case, that they don't want an appraisal. But you can't count on that, because you have to remember, cash buyers don't want to overpay either. So don't assume a cash buyer doesn't want an appraisal. So that's what an appraisal is. It's an opinion by a professional of the value of a property. Okay, let's move on to what an appraisal gap is. So let's say, for example, you go in, you put an offer on a property for $1 million. Offers accepted, you're under contract, buyer and seller both agree that the purchase price will be $1 million. Whatever the contract said, and again, every situation is going to depend on what your contract says. But let's assume that there's going to be an appraisal for this purchase. This transaction has an appraisal in there. It's the option of the buyer. The contract might even stipulate that if the appraisal comes in low, the buyer has the right to terminate. And that's going to vary on what your contract says per state, per agreement. So just be sure what your agreement says. So this transaction for $1 million is going to have an appraisal done. Okay, appraiser goes out, looks at the property, does all the comparisons, all the adjustments, comes back, and it says the appraised value for that property is $800,000. Okay, that's a little bit shy from that $1 million that buyer and seller agreed on, right? That is an appraisal gap. And here's how it can affect things. Okay, if buyer and seller have agreed that the sales price was going to be $1 million, they went and did an appraisal, the appraisal came back, it was $800,000, you have a $200,000 appraisal gap there. Where's that money going to come from? Because the lender, in most cases, is not going to lend enough money to the buyer to buy that at $1 million, because they're over lending for the property value. Now, there can be some extreme circumstances that they might, maybe other secured assets or something like that, but we're just broad stroking here. So that the lender probably isn't going to lend for that. So now the buyer has to consider, do they want to still purchase the property? Because you have to keep in mind too that right now the buyer is thinking that they are overpaying, and they might be. Keep in mind, appraisal is an opinion. They might have another appraiser that has a different opinion, but it could also be that this property is the only property they ever wanted, and they're okay with overpaying a little bit because they're going to be there for 20 years, 30 years. Their adjustments in property values over the years are going to erase that $200,000 appraisal gap in a matter of years. So they're not so worried about that, but they still have to come up with the money. So if they are going to borrow the money and the lender is only going to lend enough based on that $800,000 value, doesn't even mean that they're lending them $800,000. It might even just be a percentage of that $800,000. So they may already be kicking in some cash for the down payment. Now they have to kick in more cash to cover that $200,000 spread between the appraised value and what they agreed to buy it at. Now keep in mind, their contract may have left them some outs. If it didn't appraise enough, they're allowed to terminate. Again, that's going to be based on each and every contract. But let's just say that they do want to proceed. They want the home. They can either try to renegotiate with the seller for a better price. I have seen it where a person thought that was assumed. I had somebody one time respond to me that, I know if it comes in low, we just buy it at that price. No, That is a negotiation, unless that has been pre-written in your contract from the very beginning, that the buyer will then buy at the appraisal price. Unless that's agreed to in the beginning, don't assume that's going to happen. There is nothing that requires that seller to reduce that price to the appraised value. So don't assume that. So a couple things can happen. They can either try to renegotiate the price and get the seller to come down. Even if they come down a little bit, they still have a gap there unless they come all the way down to that 800,000. So you have to decide, how's that going to be handled? Are you going to kick in more cash to make that purchase? And this is something both buyer and seller need to consider, because on the sell side, if you are being ambitious and you are asking a price for your home or your property that you think might even exceed appraised value, you have to be ready for that to happen. Because if a deal comes to the table and you accept it and you don't think it's going to appraise, well, you may have pulled that property off the market for some time, only to later find out that it's going to terminate because they don't have the money, because it didn't appraise high enough to get them the money. So see, sellers have to be aware what can happen too. Otherwise, what may have looked like a sweetheart deal that they got under contract is going to later fall apart because they can't get the money. So sellers have to be aware of that. Buyers have to be aware too when they go in and they fall in love with that house and they're like, I don't care, we'll pay $200,000 over the list price, which does happen in a hot market. We're coming off a super hot market where that was the norm. People were paying over list price all day long. And so we ran into a lot of appraisal gaps that needed solutions. So if a buyer is all excited and they're willing to pay because they love the home, it's the only home they ever wanted, they're going to be there for 20 years, you still have to come up with the money. So if you're going to go into an ambitious deal like that, you're going to want to have a plan more than just hoping it appraises. You're going to want to plan for that. So buyer and seller both need to plan for this scenario in certain markets, especially in properties that are high demand or the market's really hot, things are appreciating really quickly. You can start to get some appraisal gaps in there, because when you consider appraisals are based on comps, and comps are in the past. So if you have a market that's appreciating really quickly, well, the properties that closed recently in the past haven't quite caught up to what the hot market is moving. So see, there's a little bit of a lag there. And some markets adjust more quickly than others, but you just want to be aware that that gap could occur there. So just a little information about appraisal gaps. And do you want one? Usually not. If you are the buyer and seller, you usually don't, because you're having to work out where those additional assets, that cash is coming from to cover that spread. So that answers the question whether you want one or not, and we covered what one is. So my name again is Sean Larson, real estate broker. If I can answer anything about appraisal gaps or anything else, reach out. I'll take great care of you. Have a super day.